Imagine comparing the UAE's journey from 1971 to today with that of India, China, the US. I mean, a young country, relatively speaking, but with some remarkable achievements. Welcome investors to Deep Dive with the Invest Money UA channel. This quarter, the UAE hit a new landmark. Non-oil activities now make up over 77% of GDP. What does that shift truly mean for its future, and what's powering it? Stay tuned. This deep dive will unpack the latest Q1 2025 economic data for the UAE, focusing on its, well, record-breaking non-oil GDP.
Yeah, and what makes this truly compelling is that the non-oil contribution of 77.3% isn't just a number. It's actually the highest in the country's history. This isn't just, a sign of success in economic diversification. It's a powerful signal of a mature, resilient economy, one that's actively shaping its future beyond traditional resources. We'll explore what these numbers mean, the specific sectors really driving this growth, and the broader context for you, whether you're an investor or just, curious.
Absolutely. Our mission today is to break down these key figures, understand the distinct contributions and strategies from individual emirates like Abu Dhabi and Dubai. We'll delve into the national drivers and potential risks shaping this trajectory, and then put it all into a fascinating historical perspective. Okay, let's dive right into the big picture numbers for the UAE in Q1 2025, because they are genuinely striking.
They really are. The UAE's real gross domestic product, or GDP, grew by a robust 3.9% year-on-year. It reached a total value of DH 455 billion. That's 455 billion UA dirhams, for those maybe new to the region's currency. What's truly fascinating here is how much of that growth and that total value is now coming from, outside the traditional oil sector.
Exactly. And it's not just a small shift, is it? Non-oil GDP alone surged by 5.3% year-on-year to hit DH 352 billion. That means non-oil activities now make up a historic 77.3% of the total output. That leaves oil-related activities at just 22.7%. When Minister of Economy and Tourism Abdullah bin Tukalmari highlighted this, he wasn't just stating a statistic, he was underlining the nation's strength and resilience, reflecting a palpable confidence from investors. But beyond the headline number, what specific parts of the economy are truly leading this impressive shift?
Yeah, that's the crucial question, right? If you look at growth, manufacturing actually topped the list with a very impressive 7.7% expansion. Close behind were finance and insurance, along with construction. They each recorded a solid 7% growth. Real estate activities rose by 6.6%, and trade advanced by 3%. These aren't minor increases, they're significant leaps.
Okay, 7.7% for manufacturing, that's substantial. And in terms of contribution to that non-oil GDP, what does the breakdown look like? Where are the real pillars holding this up?
Well, when we connect this to the bigger picture, the top contributors to non-oil GDP truly reflect that deliberate diversification strategy at play. Trade, a historical stronghold, still led with 15.6%. But finance and insurance are hot on its heels at 14.6%, followed very closely by manufacturing at 13.4%, construction at 12%, and real estate at 7.4%. What really stands out is that these are broad-based contributions. It shows a healthy spread across multiple sectors, not just, a reliance on one or two shining stars.
So this transformation isn't just about hitting targets then, it's revealing distinct economic ecosystems taking root. For you, as a learner or maybe a potential investor, understanding where these transformations are most concentrated, in specific industrial niches or maybe emerging healthcare opportunities, that's key to identifying the next wave of growth. This goes beyond just generic diversification to highlight specific sectors poised for sustained strategic expansion. But a big question looms. Are all Emirates benefiting equally from this growth, or are we seeing different strategies play out? Let's turn our attention to Abu Dhabi first. Our sources show its economy expanded by 3.4% year-on-year in Q1 2025, reaching DH 291 billion.
And what's truly fascinating here, really a milestone, is that for the first time ever, non-oil activities accounted for 56.2% of the Emirates' total GDP. That reached DH 163.6 billion. It's a significant 6.1% surge just in that non-oil part. The oil sector contributed the remaining 43.8%, or DH 127.4 billion. Officials like Ahmed Jassim Al-Zabi from the Abu Dhabi Department of Economic Development, they credited this success to their Falcon economy, which is essentially a multidimensional strategy designed to accelerate non-oil growth across various fronts.
Okay, the Falcon economy. Let's unpack this a bit. Which non-oil sectors are truly flying high in Abu Dhabi, and what are the specific engines behind that growth?
Well, Abu Dhabi's non-oil economy, while diversifying, shows a clear strategic focus in certain areas. Manufacturing, for instance, remained the biggest contributor, generated DH 28.5 billion. That's a 5% increase just from Q1 2024. And this growth was boosted by a 4.7% rise in new industrial licenses, and an impressive, get this, 65% jump in factories moving from construction to full operation. You can almost feel the gears turning, can't you?
Wow, 65%. That's huge. It's not just a statistic, it's tangible jobs, bustling industrial parks. What other sectors are showing similar strategic momentum there?
Construction also showed really robust momentum, expanding by 10.2% to DH27.5 billion. And this isn't just busy building, it's directly supported by major infrastructure projects and innovative AI-powered platforms like BNA, which streamlines permit approvals, makes things faster. Then the finance and insurance sector recorded a 9.1% jump to DH19.6 billion. You see the Abu Dhabi Global Market, or ADGM, which serves as their premier international financial center, seeing a 43% increase in registered financial institutions. That's significant. Assets under management rose by 33%, and net foreign inflows into the Abu Dhabi Securities Exchange, or ADX, also surged by an incredible 151%.
151% inflow surge.
Yeah.
That's a powerful vote of confidence, like you said. And beyond those core sectors, our sources note healthy growth in retail and wholesale trade too, right? Up 3.6%. Benefiting from Abu Dhabi's expanding population, which reached 4.14 million in 2024, up from 3.8 million the year before. Transportation and storage expanded by 7.5%, and real estate activities increased by 6.7%. Even arts and entertainment saw an 8.4% uptick, and health services grew by 5.2%. It really paints a picture of comprehensive growth.
Indeed, it really does. And this points clearly to a strategic long-term diversification plan.
Oh.
Abu Dhabi is not just reacting, it's proactively investing DH13 billion in its digital strategy for 2025-2027, aiming to be the world's first fully AI-native government by 2027. That really underlines their commitment to innovation-led growth.
Right, a fully AI native government. That's quite an ambition. So while Abu Dhabi is clearly leaning heavily on industry finance and digital energy diversification, what distinct story is unfolding next door in Dubai? Well, Dubai's economy also showed robust health in Q1 2025. It recorded a GDP of DH 119.7 billion. That's a 4% increase year on year. And this builds on an already strong 3.2% growth for the full year 2024.
Yeah, but what's truly surprising here, the real standout sector. Well, while many might expect real estate or trade to dominate Dubai's growth narrative, our sources reveal a truly remarkable surge in human health and social work activities. It expanded by an incredible 26%. 26%. This isn't just about managing population growth. It signals, I think, a deliberate and strategic pivot towards Dubai as a regional healthcare hub. It's potentially opening up entirely new investment avenues beyond, say, traditional property plays.
That 26% surge is truly staggering. Is that purely a result of the city's population growth, or are we seeing a deliberate strategic push? Like you said, Dubai aiming to become a regional medical tourism or healthcare innovation hub. And what does social work activities specifically encompass in this context? Is that clearly defined?
It's definitely more than just population growth. The sources suggest a strong strategic intent there. Dubai is actively strengthening its healthcare infrastructure. They're investing in advanced medical facilities, attracting specialized talent, really aiming to be a top destination for medical tourism and health tech innovation. Social work activities in this context typically refers to various community support and welfare services. These often expand naturally with the growing diverse population and a deliberate government focus on social well-being alongside economic growth. But, with such rapid expansion in a critical sector like healthcare, what are the potential challenges Dubai might face in maintaining high-quality services or attracting the specialized medical talent required to sustain this? Are there any signals from our sources about these potential hurdles?
That's a crucial point. Our current sources, they really highlight the successes, yeah. But the ongoing demand for highly skilled professionals and the infrastructure to match that 26% growth, that will undoubtedly be a challenge to monitor closely going forward.
Okay, so beyond health, which sectors are traditionally key for Dubai and how are they performing now?
Well, real estate, a longstanding cornerstone of Dubai's economy, it grew by 7.8%. The value was DH9 billion, contributing 7.5% to the Emirates' GDP. Still very significant. The finance and insurance sector expanded by 5.9% to DH16 billion, contributing 13.4% to the economy, reflecting its role as a global financial center.
And trade, always a massive one for Dubai, right? How's that looking? Absolutely. Wholesale and retail trade remains the largest single contributor to Dubai's economy. Valued at DH 27.5 billion, it saw a 4.5% increase, accounting for 23% of total GDP. Still the biggest piece. Transport and storage, vital for Dubai's global hub role, grew by 2% to DH 15.7 billion, with air transport being the biggest driver there, connecting the world through Dubai. Accommodation and food services, a key part of tourism, grew by 3.4%. Manufacturing also saw a solid 3.3% rise.
And in terms of broader trade, Dubai's non-oil foreign trade surged 24% in the first half of 2025 alone. This, according to Sheikh Mohammed bin Rashid Al Maktoum, Vice President and Prime Minister of the UAE and ruler of Dubai, underscores the Emirates' pivotal role in economic diversification. Policy-wise, Dubai's economic agenda D33 and a focus on data-driven decisions are clearly playing a huge role in directing this growth.
Yeah, it's just worth noting quickly that Dubai's CPI inflation did accelerate a bit to 2.9% year-on-year in July, though Emirates NBD Research expects it to soften later in the year, which is, of course, a key factor for residents and businesses alike.
Okay, so the individual tales of Abu Dhabi and Dubai, they reveal their distinct strengths and strategic plays. Very different headlines in some ways. But when we weave these emirate-level narratives together, a grander story of national ambition seems to emerge. What's the overarching strategy that truly connects these diverse growth engines across the entire UAE? While the overarching driver for the entire UAE is undoubtedly its aggressive economic diversification, moving decisively away from oil dependence. This is clearly articulated in the We the UAE 2031 vision, which aims for a DH3 trillion GDP within the next decade.
That's not just a bold target, it's being supported by a network of very tangible strategies, like the Comprehensive Economic Partnership Agreements, or CPAs. The UAE has concluded 28 of these to date, with 10 already in effect. That's quite something. In Q1 2025, non-oil foreign trade surged, with key partners like India up 33%, Turkey up 41%, the US up 29%, and China up 15%. And free trade negotiations have also commenced with the EU. These agreements are literal blueprints for expanding non-oil trade.
What's truly fascinating here, I think, is the laser focus on specific industrial growth, particularly in Abu Dhabi we saw. Their industrial strategy, ADS, aims to more than double the manufacturing base to DH 172 billion by 2031. How is this different from just general economic expansion? It's a national priority, yes, but what makes it so central?
Well, it's central because it's about building foundational high-value sectors. This isn't just about services, right? It's about actually making things, about advanced manufacturing. And that creates a ripple effect throughout the economy. This kind of commitment to industry really underpins true economic resilience. We also see significant strategic investments that reflect this vision. Q1 2025 saw 63 mergers and acquisitions deals worth over $20 billion. That was the highest in the MENA region, that's the Middle East and North Africa. This includes deals like Group 42 acquiring a stake in Cosna Data Centers, and Etihad Airways' huge $14.5 billion deal with Boeing and GE Aerospace. Plus, you see clean energy partnerships like the $1 billion agreement with Italy and Albania for renewable projects. These clearly underscore future growth areas. These aren't just transactions. They're strategic plays for long-term growth.
And the digital transformation across both Emirates, like Abu Dhabi's digital strategy aiming for that AI native government, seems to be a huge cross-cutting enabler, doesn't it?
Oh, absolutely. Digitalization isn't just an upgrade. It's really a foundational shift. However, when we talk about risks, our sources, while highlighting global factors like U.S. wholesale prices rising 3.3% in July and industrial production in China slowing sharply to 5.7%, they also implicitly point to potential internal challenges for the UAE, things you have to consider. For instance, maybe the dependence on a highly transient expatriate workforce, or intense regional competition for talent and capital, or even just the practicalities of scaling an AI-native government by 2027. I mean, that's ambitious. These are the nuances that truly inform a robust investment thesis and require careful management alongside those global economic shifts.
Those are critical internal considerations, absolutely. Things to watch. But even with these in mind, the forecasts for the UAE remain remarkably strong, right?
They do, generally. The IMF forecasts a robust 4% expansion in the UAE's non-oil sector for 2025, driven largely by manufacturing, tourism, and foreign investment. Specifically for Abu Dhabi, the IMF projects 4.2% growth in 2025, accelerating to 5.8% in 2026. Then that national goal of DH4 trillion in non-oil trade by 2031, it's now actually expected to be achieved ahead of schedule.
Ahead of schedule. That says something. To truly appreciate why this progress matters so much, though, we need to maybe look back quickly at where it all began. Looking back, the UAE's journey since its formation in 1971 is, well, nothing short of remarkable. The average economic growth rate from 1971 to 2024 has been an astonishing 7.37% per year, on average. To give you some context, economists consider 7–8% annual growth extraordinary, especially over such a sustained period for a developing nation. It's a testament to rapid strategic development.
Yeah, and if we connect this to the bigger picture, that non-oil contribution to GDP has steadily climbed from 71.3% back in 2020 to its current 77.3% in Q1 2025. This isn't just, organic expansion. This continuous upward trend reflects sheer willpower. and the effectiveness of the nation's strategic economic planning and decisive policy execution. It's truly creating a global benchmark for advanced economic policies, as some sources put it.
The sources consistently emphasize the uniqueness of the UAE model, too. This isn't just about gradual evolution. It's a rapid, deliberate diversification from an oil-dependent economy to one based on knowledge, innovation, and diverse industry. This isn't simply market forces at play. It's very much a government-led transformation through ambitious visions like Dubai Economic Agenda D33 and We the UAE 2031.
Indeed, it highlights the country's proactive policies and significant investments in high-growth industries. This approach doesn't just attract businesses, it cultivates an environment that draws in investors, entrepreneurs, and global talent. The sheer pace of change and the scale of ambition are truly what set the UAE apart on the global stage.
So with that incredible legacy and that strong forward momentum behind us, what should you, as an investor or business leader, truly take away from today's deep dive? Let's quickly recap some key stats for you. The UAE's economy grew a robust 3.9% in Q1 2025, getting $455 billion. Non-oil activities making up that historic 77.3%. Abu Dhabi saw its non-oil GDP reach 56.2%, driven by powerhouse sectors like manufacturing and finance, while Dubai posted 4% growth, led by that remarkable 26% surge in health and social work, signaling a potential strategic pivot.
The key investor takeaways, I think, are pretty clear. The UAE demonstrates strong economic resilience and a sustained, unwavering commitment to diversification. That's the headline. Government support, strategic trade agreements, massive investments in high-growth sectors like manufacturing, construction, finance, health, trade, and real estate, coupled with aggressive digital transformation strategies, it all collectively creates a very attractive and remarkably stable environment for long-term growth and investment.
This whole deep dive makes me wonder, though, given what we've seen this quarter, which sector do you think will surprise us in Q2 or maybe 2026? Will it be manufacturing again, holding strong, or perhaps something newer like green energy or tech really taking off? Why do you think that?
And that raises an important question for all of us, really. Do you believe the UAE can continue pushing non-oil GDP higher, maybe toward 80–85%? What policy or global factor might make or break that ambitious goal? Something to think about.
Stay tuned for such insights. We will meet next week. Happy investing, and please subscribe to the Invest Money UAE channel.